on the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, about 2 minutes away from the end of the trading day, we've got Scarlet Fu and Sonali Basak right here counting you down to the closing bell. And, of course, joining us to take you beyond the bell with a global simulcast, Massar and Tim Stenovec, bringing together our audiences across Bloomberg Television, radio, YouTube to parse through the most crucial moments of the trading day. It has been up, and up all this trading day, whether you're talking about bond prices or stock prices.
Yeah, everything is awesome, I guess. I don't know. It's really remarkable, but I'm just amazed if I look at the 11 industry groups in the S&P 500. I know we'll talk about them in just a moment, but 10 of the 11 are up. I mean, it really feels like the bullish sentiment really overtaking, and some of it has to do with, Tim, right? That this idea that maybe central bankers, maybe Jay Powell and company are getting to the end of raising rates.
Maybe. That's the question. I think what we find out the answer to before that, though, and you say, Scarlett, the most crucial moments of the trading day, I don't think we've hit the most crucial moment of the day yet, which is NVIDIA earnings happening in just about 20 minutes. We've been spending a lot of the afternoon asking our guests what's most important this week, NVIDIA's report today or what Powell says in Jackson Hole. And more people today saying NVIDIA.
Yeah, and they're not the only one. You think about what you get in terms of NVIDIA's additions to the S&P 500, the SOX, and other indices this year, and it has just been a meteoric rise, and it's brought a lot of boats up with it. And the question is not just NVIDIA alone today. How do those other stocks rise or fall in tandem?
I was looking at some of the valuation measures for NVIDIA, and it's pretty remarkable if you look at the PE, the estimated PE, all of that for this company. I mean, it's just completely out of whack. 226 PE, just for starters. All right, there's a closing bell.
What's wrong with that, kiddo?
They are profitable. This is true. They're just paying a lot for it.
Yeah.
We're looking at gains here for equities all around. The S&P 500 closing up more than 1%. That's a 48-point increase. The NASDAQ, the leader here, gaining 1.6% on the day to 13,721. The Dow, a bit of a laggard, gaining only half of 1% to 34,474, Carol.
Yeah, I just want to mention David Traynor of New Construct. We had him on to talk about Peloton, but we also talked a little bit about NVIDIA, and he said, good company, not a great stock, Sonali, because of the overvaluation right now.
Yeah, when I take a look at the sectors within the S&P 500, broadly higher on the day. Look at all that green, guys. But you are lifted up significantly by semis ahead of that NVIDIA report today. Media and entertainment, technology, auto. You saw green across the board, even in the banks. You did have a little bit of red on the screen. Those are consumer durables and apparels there with 0.8% decline on the day, and energy down about 0.4%. Remember, we did see some pressure on oil prices today.
All right, so let's get to some of the individual gainers, if we may, in today's trade. Just pulling them up on my Bloomberg. Abercrombie & Fitch, certainly an outperformer, up more than 23% in today's session. Cool, again, apparently, everything that the company has to offer. Soaring, it reported better than expected quarterly results. Boosted its year forecast. Citi analyst over there saying that this was a blowout quarter, so no doubt about it is, again, that stock up 23%. Netflix, this was up about 3.5%, rallying on optimism that the company's password crackdown is fueling some growth. Oppenheimer also affirming its outperform rating and $515 price target. The company closing at $427 and change. Oppenheimer citing tailwinds from its paid sharing and advertising initiatives. And then I got to mention NVIDIA, up another 3% in today's trade ahead of earnings today. It's up, 220% year to date. The stock had pulled back from late July to kind of mid-August, about 12%, and then it's rallied about 15% since then. But nonetheless, we're all kind of on pins and needles waiting to see if that valuation, that outsized evaluation, makes sense based on the actual fundamentals.
All right, we're on pins and needles waiting for NVIDIA, but there are some other companies reporting right now. Let's go to what Autodesk is doing in the after hours after the company reported that it is boosting its fiscal year adjusted earnings per share forecast. Also, it beat estimates. Second quarter adjusted EPS coming in above estimates at $1.91. Estimates were for $1.73. We also saw the company come out and say that its third quarter adjusted EPS is $1.97 to $2.03. So its outlook there, beating estimates that analysts had of $1.92. In the after hours, it's surging up 6%, Scar.
All right, let's take a look at what's going on with yields as well, because as much as we've had a rally in stocks, we've also had a rally in treasuries as well. You can see the yields falling, whether it's the 2-year or the 30-year. There was an auction of 20-year bills, or I should say notes, excuse me. Bills notes. There was a 20-year auction, which tailed by nearly a basis point. It stopped at just under 4.5%. So it was fairly tepid demand, but again, yields coming down here and by a fairly large margin as well. Look at that 10-year yield down by almost 14 basis points.
All right, I'm going to go back to some decliners because I was doing Autodesk when decliners came across Scarlet. Foot Locker finished the day down by more than 28% today. At one point, it cratered more than 36%. This after the company slashed its annual outlook for a second time and paused its dividend payment. The results certainly falling short of Wall Street expectations amid concern over weakening spending patterns from consumers. Citi actually says the sustainability of the brand is in question. We also saw shares of Nike fall as a result of Foot Locker's report. Under Armour was down as well. Nike down for a 10th day in a row. This is the longest losing streak for the company going all the way back to its 1980 IPO. So longest losing streak for Nike in 40 years, down another 2.7% today. It was already struggling before we heard from Foot Locker. This was over concerns of China's sluggish consumer and then elevated merchandise stockpiles continuing to weigh on profitability across the entire apparel industry. Peloton finishing down by 22.6%, hitting a record low. Shares are down 97% from all-time highs. That was back in January of 2021. The company gave a forecast for the current quarter that said costs for a product recall were significantly more expensive and a weak revenue forecast for the upcoming quarter and remainder. I should note David Traynor over at New Constructs, he's been advising people to sell. He thinks that Peloton can go to zero.
Really?
Yeah.
But there's hardware there. There's some value.
There is, but I mean, he said there's just spending way too much money. Continue to spending way too much money.
I'm guessing people canceled their subscriptions or paused their subscriptions when they went traveling this summer and just haven't renewed it.
Not just that. People paused their subscriptions as a result of the recall.
Yeah.
Yeah, it just seems like they can't kind of get it right. His point is, too, that there's other options out there and so on and so forth, but we'll have to see. Hey, I do want to mention, we do have another earnings report crossing the Bloomberg terminal, and this is Splunk specifically. And this, again, is an infrastructure company, and we're taking a look. Second quarter adjusted EPS, 71 cents a share versus 9 cents. That's year over year. We're also looking at product revenue of $640.2 million. That is beating the Wall Street expectation, 624.9. And if we look at revenue, again, overall, as we said, it's beat. And we're looking at that stock up 6% in the after hours. This is an infrastructure hardware company. They've got AI-driven software. So we're going to see how much that is driving some of the momentum. Keep in mind, though, this is a stock that's up on the year, but down about 50% from its September 2020 high. So it's still looking for some recovery. Also, some outlook here. Third quarter revenue, 1.02 to 1.04 billion, guys. That is very upbeat as well. The street estimate out there is 981.6 million. So again, that stock up 6% in the aftermarket. Okay, we're also keeping an eye on Snowflake because the software company that really does a lot of cloud work has come out with its second quarter numbers. And here we have a beat for the revenue line, $674 million versus the estimate of 662. Product revenue also beating the consensus estimate. But the third quarter forecast, when you look at the midpoint of the range, it is below the average analyst estimate. Also, the company did not raise its full year forecast. It still sees its full year product revenue forecast at $2.6 billion, pretty much in line, if not a little bit lower than the consensus estimate. So the stock, as you can see, down about 4% at the moment, accelerating its declines. Yeah, it's kind of interesting. A bunch of software players, if you will, infrastructure and otherwise. Autodesk up 6.5% in the aftermarkets. We're seeing Splunk also move up higher in the after hours, up, let me just pull it up real quickly, up about 6% as well. And of course, we're waiting for NVIDIA, which should be out in about 13 minutes from now. And I know you guys are going to be all over it, and as we will as when it breaks and crosses the Bloomberg. All right, that's a wrap. A lot going on again on this Wednesday. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We call it Beyond the Bell. We'll see you again, folks. Same time tomorrow.